substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Oh, there we go. Hold on. I was using the other microphone yesterday and I forgot to switch it over because that one has power and you power this one. It kind of, I mean, it doesn't, it's okay, but it doesn't need, anyways. Welcome. It is the 26th, Wednesday. This should be, I think today could be interesting. Well, let's see here. What do we got on the docket? Fed's quarterly speech. So there's not really a whole lot on news-wise here. But hey, yesterday was kind of an interesting day. So let's get into that. So here we go. Oh, I drew this line for fun. Let me get rid of that. There we go. Okay, so yesterday, a little bit of a down day. Zoom out here. Yeah, a little bit of a down day. Downer on the open. Never recovered it. Overnight, a little bit up, but still off. Still down a bit. But I mean, hey, we're like just short of all-time highs. I do have to wonder, if we come back out here to like a larger time frame, if we were to fall down again, but normally something like this, they'll kind of do more of like ascending triangle sort of thing and then bust through that resistance. So I don't know. That's what I think is going to happen. Not that it has any probability, better probability than any other guess I could give you. The treasuries yields reduced quite a bit yesterday. And you can see here the flattening between the ZN and the ZB, the 2 and 10. Here, 2 and 10 flattening. Wow, CB is not, the knob spread not really changing though. It's kind of interesting. And we come over into the commodities. Oil not really moving a whole lot. Gold making a move though, right? Gold and silver up quite a bit. Silver up well above 28. Really want to see silver above 29.30. That'd be awesome. And copper going sideways. So, the market has kind of tried to factor in this Chinese credit impulse. I don't think that it's completely factored in yet. I think that it'll be something that will just kind of really long over time. Frontier says, hey, good day. We just started. How can you say that it's already a good day? You've already made money? I'm jealous. No, so, now, the one thing that I should note, though, is that it is Wednesday. So, a lot of money gets put to work on a Wednesday. So, we'll keep an eye on that. So, turn on the Texas speech here. Do I sound okay, by the way? Yeah, I think we're good. Oh, I see. What are they talking about here in Discord? And that was like yesterday night. You sound like speculator. There you go. Good. Well, there's not a whole lot for us to discuss here this morning. Oh, you know what? There was one thing was that the ECB, one thing I forgot to mention. I missed one thing very important. The euro taking a little bit of a dip overnight off of some really dovish comments from the ECB, basically saying the same thing that the Federal Reserve is saying. So it's really interesting to me because we're looking at this and it's like, man, we're up so high, we're getting inflation, probably monetary policy is too easy, and the Fed needs to do something. But one of the things that we forget, that's so easy for us to forget, is that the Federal Reserve ain't the only one out there, right? There's many central banks and ways of, changing liquidity and so forth. And China is a really big player now, right? China is almost as big of an economy as the United States is at this point. And what they do over there in their economy affects everything globally as well. And what are we seeing? Well, they're reducing their credit impulse. So China is pulling back. So it's like nobody else needs to. Like if we're overbought, China can do that and everybody else can just keep their policy the same. That seems to be what's going on here. How it's all shaking out monetary policy wise. Okay. Let's see here. Last thing I see on Twitter, UBS on the ECB expects signal that the PEPP purchases will continue in quarter 3 at a pace similar to quarter 2, and tapering is too early. Purchases at an elevated pace would support aim to maintain favorable financing conditions amid recent rise in easy yields and spreads and euro. Yeah, okay. Okay, I don't have my chat up here. How to get rid of the indicator information from the screen in NinjaTrader? What do you mean? You talking about this bit up here that shows up in like the upper left corner of the window? That I know that drives me crazy too. So what you gotta do? Hold on. We should turn on Jay here. Jay was doing pretty good yesterday, by the way. He made $50. I was impressed. So what you do is you come in here into indicators. And then on the indicator, if you scroll down and you see how there's a label, you just remove everything in the label so that it's blank and click OK. And then you see how the names of the moving averages don't show up over there. So that's how you do it. I think I just popped every joint in my back there. Ooh. You know what? I don't like the new color for Discord. Discord changed their logo and chose a more colorful blue, and I'm just not so into it. Amazon will acquire MGM for a purchase price of $8.45 billion. Watched your video about the moving average on Bitcoin, and that was a really bad example. It bounced there for more than 8K. So someone who bought there could have made a decent profit. Well, yeah, but if you think about it, who really buys it there off of that, right? No. They're all already in, or they bought in at higher levels, and it comes down there and they say, buy the dip. This is just a bounce. And then they bought and hold it. And then did they take the profit off of it? No. Just go and read the Bitcoin subreddit. None of them took profits and got out. None of them traded that little swing and made money, right? Because they all thought this moving average will continue to lend support until the stock to flow model is complete and we get to 100,000 or whatever it is that they're looking for. And then, all of the margin positions got liquidated. On Bitcoin, by the way, here's what I'm hearing in Bitcoin. Not that this has any like probability of happening per se, but a lot of people are pointing out that there's options that expire this weekend in Bitcoin. And so they think that Bitcoin will come back to where the options expire at first, and then they'll let it fall. Isn't that interesting? But the thing that I find the most curious is that I would have expected a lot of people to be going, hey, buy the dip. Well, the lay people are saying that. Like if you go on the subreddit that you go on Facebook, they all saying that. But when I get on TikTok or, I look at the influencers, the influencers aren't so convinced. The influencers are kind of thinking that it's over. I think because the influencers are married to some of these like moving average things and stuff. So like they think because they failed the moving average that the bull run is over. So is it going to be over? Oh, I don't know. Like the thing is that if it's not over, this would be unusual, right? Is the moving average as relevant as how many people use it, or it's like Fibonacci levels, which is like natural levels of a cycle? No. So here's how I would think about it, Frontier. You want to know what something is worth. And if something is being priced by the market for less than it's worth, then you want to buy it. And if it is being priced by the market for more than what it is worth, then you want to sell it. And you can look at what the difference between what it is really worth and what the market thinks it's worth. And based off of that difference, you can calculate the optimal number of contracts to trade to take advantage of that discrepancy in price. Okay. And if more people than that optimal number of contracts try and trade that inefficiency, then those people will lose, essentially, right? Because what happens is the impact of the trades becomes more than what the signal is worth. And so then you're introducing an inefficiency the other way because you're trading more contracts than the inefficiency is worth is introducing an inefficiency in and of itself, right? So if you try and game that out on the level of like a Fibonacci or a moving average or something like that. So there's your first problem with a strategy of that nature is when you have a moving average, does the moving average say it's worth X? It doesn't. It's trying to tell you something about trajectory and what the trend is, but it's not telling you this asset is actually worth this thing. So it's hard for you to judge what is the number of contracts that you can trade it for. But what you could do is you could go back and you could create a strategy that's like, okay, when we hit the moving average and we bounce off of it, that is on average good for X ticks, right? We could go and we could do that in as a strategy analyzer, right? So we could go and we could say, oh, it's worth 16 ticks, okay? And then I can look at the volume and I can say, okay, so if it's 16 ticks, and this is what the average volatility of the market, price volatility of the market is, and this is what the average volume volatility of the market is, what is the optimal number of contracts that can trade on that trade? And then if you see more volume than that trade, then you know that there's an inefficiency that has been introduced into the strategy. And so it's going to fail. Like what's going to happen is you're going to buy into it and too many people will have already bought into it and you'll buy the high and then it'll come back down. Right? So this is where this whole idea of like with technical analysis, the chicken and egg problem, does that kind of explain why it just doesn't make sense. It's not like it's kind of hard to sit down and say like falsify it per se, other than to like back test the strategy and show you how it tends to perform. But it's a completely, it's so far off from the way that the market actually behaves that it's it's going to be of questionable utility no matter what, essentially, right? Yeah, for that one, you would need a lot of simulation data and data models to run it. Well, I mean, I don't know. I can go in and I can say on Bitcoin, when you cross the moving average, what tends to happen, right? But then there's the whole question is like, does the cross of a moving average identify a real market inefficiency? It could. That's the thing, is it could, the cross of the moving average could indicate that Bitcoin is not worth as much now and that there's going to be continued momentum to the downside. But it's Bitcoin, so like it could just be random, right? So you're going to go and you're going to take a trade off of something that could just be random. If it's just random, then how do I know that it is going to continue to perform the way that it's performed historically? You really don't, do you? Because it could just be random. Again, right? That's why like a much better quantitative trade is to calculate what it's worth and trade that. So that's why one of the ways. So let me give you like something that I probably shouldn't say, but I'm going to say it, and people will like dismiss it because it will seem so trivial. It'll seem like so much of a no duh sort of a statement that you won't realize how important it is to the markets, but. Because your next question is going to be like, okay, so how do I properly value something, right? Well, treasuries is a really, really great example of this, because what I can do in a treasury is I can say, here's the 30-year treasury. Here is the current cheapest to deliver treasury that is available, because there's a bunch of different treasuries that are qualified to be able to be delivered, and one of them is the cheapest to deliver, and so that's the way that the contract works, right? So I can take that cheapest to deliver, and I can use what the yield on that treasury was and what the price that it's going for right now, and I can come up with a conversion factor. And I can use that conversion factor to then figure out, based on the 30-year, what should the 10-year be worth? And what should the 5-year be worth? And this all kind of has to do with things on the yield curve and stuff like that. I mean, that's kind of part of why the yield curve will go up and down, is based on how the interest rates are changing. But I digress. The point is that I can come in here and I can say, if the ZB is worth 158.22, then the 10-year is worth 132.31.5, right? Ergo, if the 30-year moves down, then the 10-year will probably move down too, right? So to be much more simple about it, what's a great way to value something? Compare it to something else similar, right? And so this is what a lot of these quant firms do, but they do it with stocks. They go and they say, okay, well, AMD is a semiconductor and it's going up in value, so NVIDIA should go up in value. And if it's not going up in value, then they'll measure the difference and take the trade. They'll measure the difference, take the correct number of contracts, and eliminate the inefficiency, right? Correlation is a great way to value assets. So let me try and take it back with a more simple analogy, in case what I just said was just like sounded like a bunch of gibberish, because it might have, because I kind of started to go a little bit too deep into stuff that I probably should have kept it more simple. If you go to a garage sale and you see something, okay, you're at a garage sale and you see Yeah, like in Toy Story, the guy he's going through and he sees the Woody doll and he gets all excited because he knows that the Woody doll is like worth something because he's been looking for it, right? But what would you do in that situation? You're looking at this thing, you're at a garage sale, you're thinking, hey, I could buy this and flip it. What's the first thing that you're going to do? You're going to pull up eBay, right? You're going to pull up eBay, you're going to look for that item, and you're going to see the last time that this was sold, what was it worth, right? You're going to compare the value of that item to comparable items to see what they sold for, right? Or what if it's a car? What if it's a car? You go on and you'll see, okay, what were other cars going for? And then I'll see what is the difference between them, which would be the conversion factor in the treasuries, right? This one has a rear camera. This one has a backup camera, and this one doesn't. How much does that feature cost? Oh, it's like a few $100, right? So it's like $400 or $500. So this car should be worth $500 more than this car, right? That's how you do it. I'm not saying that's the only way to trade. I mean, there is momentum. We talk about that when Ace comes back. We were having a conversation yesterday, and I didn't finish it on momentum. So momentum is an interesting one, but so someone has to create the market first. Yes, but then there is someone out there, like if, for instance, in treasuries, right? There is someone that bought the treasury from the treasury, the U.S. treasurer, when it was originally created. So that's kind of like the original basis of it, right? And then they changed the interest rate. So you kind of come in and you say, okay, this is what they bought it for, and this is how the interest rate has changed, and But you're right. Somebody has to create the market first, and then everything else is kind of relative to that, right? So for us, I might not know if a particular piece of news comes out. I might not know what the value of the S&P 500 should be based off of that news. I just know that it should be higher than what it was when that news was released. I just know that news should make the S&P 500 worth more, right? And I know that it's enough of a change that the market won't be able to price it in efficiently right at the beginning. So I can take a trade and then I can watch the order flow, right? In absolute relative terms, the dollar is used for illicit purposes far more than Bitcoin. Yeah, but we if I'm going to reduce crime, I can just get rid of Bitcoin and then there won't be ransomware anymore. And, I can't just ban the dollar. The one who creates the market is the one who screws the players. Well, I honestly, this thing about that the market is really there to hit your stops and take you out and all that. So I've done quite a bit of work on trying to sniff out people's stops. Okay, and while I can find a spot where like there is like an extreme spot where like everybody has been stopped out, but on a short-term basis, when I look at stops, what I see, especially in the S&P 500, is that just from the natural erratic behavior of the S&P 500, people's stops are going to get hit. You know what I mean? Like, it doesn't need to know where your stops are. It's going to hit them anyways. So these models, so for instance, a market making model, right? Market making model, I don't believe it comes in and says, this is where people's stops are. I'm going to push the market to that spot, wait for it to go through, and then take the contracts off. I think that what a market making model does is it says, what is the average volatility of things right now? What is the average volume volatility of things right now? What are the historical seasonality trends for that volume? And based off of that, how much volume should I be able to expect? And then if I am seeing volume more than that, then I should stop taking contracts on. Right? And then there's somebody else that says, I know a thing. I think that the market should be worth X. And the robot is trying to detect that guy. The robot is trying to say, somebody is buying more contracts than would be standard. So something must be up. I better be sure to not trade against that. I mean, here's the thing. If I had a data feed that told me where people's stops were, and there just happened to be a situation where a ton of people had stops at 4,200 and it was worth it to go and stop them out, then I suppose that you could go and you could do that. But my understanding is that nobody has that information in the futures. And the ways that I've looked at going and doing that, it's kind of like I can definitely point out to you a point at which they're being stopped out. But the thing is, if you get my indicator and you watch it, after a while, you'll notice that you kind of have a feel for where it is anyways. You kind of know the point at which one side is completely losing and there must be software created to monitor bid and ask within range. Let's say 2 points and trade accordingly. Well, I mean, that's what my thing does. Is it looks at how many limit orders were filled and where they were filled at. And furthermore, like it makes assumptions about whether those orders were entering positions or exiting positions. And based on best and worst case scenarios about entering and exiting those positions, it can game out basically break-even points, right? So I can basically, my dotted line in my indicator suite that you get from speculatorset.com is basically saying nobody that has been trading with market orders is making money at this point. Or sorry, nobody that has been trading with limit orders is making money anymore. It's impossible for anyone to have banked in enough profits to still be positive on the buy side or the sell side or whatever it is, right? So you asked another question. What do you think about removing the gold standard during the Vietnam War? Inevitable. Yeah. So it is a kind of an interesting thing, isn't it? So how did this happen? Let's talk about how this happened. So first of all, we created the Federal Reserve System. So we basically were kind of pseudo not on the gold standard anymore after that, right? And then there was the whole thing about confiscating all of the gold and putting it in the in Fort Knox and all of that sort of stuff, right? Okay, so the government said that they had all of the gold. But then why did it happen the way that it did? Well, the French came in and said, well, the United States says that every dollar is backed by gold, but they're not. They're fiat. They don't have enough gold to back every dollar that's being printed because, of course, they weren't on a gold standard anymore. So they said, so in order to force their hand, everybody should go to the mint and demand your gold. Because that was the deal at the time, was you could redeem it for gold. And that would have been really bad. So Nixon said, we're not going to do that anymore. And that was that. Right? That's how it happened. It was going to happen one way or another that they were going to stop the redemptions. Okay. So really it comes back to the creation of the Federal Reserve itself. Right? So if you want to get into that discussion, the real question is, was the Federal Reserve a good idea? Or at least does having a federal bank of the U.S. of some sort make sense? And I would argue that it does, okay? Because the problem that you have with money is that economic conditions change. And as a result of the economic conditions changing, the amount of money that you need in the system changes as well. And that's why using something like the gold standard is not a very effective economic system. And they had a lot of problems when they were just on the gold standard. Understand, like the whole economic history of the United States, when you go back and you look at it, it's like they had a bank, then Andrew Jackson got rid of it. And in the short period that Andrew Jackson had gotten rid of it, which was from 1860 until 1910, 1920, something like that, that 50 years or so were very economically tumultuous, really, until Teddy Roosevelt came in and things kind of stabilized. So there was a period there for 10, 20 years where it was literally every 3 to 5 years there was a huge economic catastrophe. You can go back and there's a crisis of 1867, and there's a crisis of 1870, and there's a crisis of 1873, and it just goes on and on and on. And you're like, what the heck was going on? Well, they were on the gold standard. So here's what would happen. Oh, there was some informed trading right there. Somebody sold it. U.S. Republican Senator Kramer, if there's no additional borrowing, I endorse a larger infrastructure bill. Okay, well, Jay got out there and then went short. That's cool. That's what he's supposed to do. I don't know if that was the piece of news that caused it. Anyways, I'm not going to trade it until I know what's going on, because it's too early. That seemed like there was some informed trading, though. Okay, anyways, so here's what would happen. You have the gold standard, and there's a certain amount of money in the system, and the dollar is worth a certain amount based off of how much gold is worth because of the supply and demand of gold. And then some other country would be like, we want to make money off of our gold. We're going to sell it. So they'd sell a ton of gold, and then that would impact the price of the dollar. And then the U.S. economy would crash because the dollar wasn't worth as much. You have massive deflation because of the deflation of gold, right? So some people have said, well, then it should be based off of a basket of commodities or things like that. But the whole problem is that the economic conditions change. So sometimes there is just a natural disaster, right? There'd be a natural, like COVID would be a natural disaster, would be a perfect example. COVID happened. Regardless of what policies we put in, of course, the policies that we put in made it economically worse. But even if we were to assume that the government didn't shut everything down and all that, people would commerce less, and it would have a negative effect on the economy, right? So then what do you do when you have deflation like that? What do you do? How do you get the economy moving again? Because now nobody wants to lend. Nobody can start a business. Nobody can do anything. They're not able to do the things that lead to a recovery. And so you're just stuck there forever. You get what happens in the Great Depression, right? Because they kept the money supply tight. Nobody had any cash. They couldn't do anything. So we had a long, extended economic depression, right? So the answer is you have to be able to modify the money supply based on the conditions, hence the Federal Reserve System. Okay, so that's the biggest key, is that being able to modify the monetary policy based on the economic conditions has been the most significant financial innovation of the last 1,000 years. Okay. It's a big deal. So from there, the question is this: how do you change the money supply based on the current conditions? How do you make that decision? How do you decide that we should increase it or decrease it based off that? So in the United States, what we've decided to do is we've made a Federal Reserve Board that where the president of the board is appointed by the president, and the ownership of the assets is by the major banks and so forth. The major industry players that this matters the most to. And then they adjust their policy based on their study and what they know to work the best, right? There are some people that don't like that. There are some people that think that the politicians should be able to change the interest rate. There are some people that think that that it should just be left to the market, which would be a problem, I think. I don't know if it's ever been tried per se. Like fiat currency, it's completely controlled by the market, but I digress. That's the real argument, is like, how should the Federal Reserve behave, right? So why is this important? Well, I think it's really important for things like Bitcoin, for instance, right? So there's a lot of problems with Bitcoin. It's an enormous energy waste. Sure, there's lots of things in this world that are enormous energy wastes, but Bitcoin in particular is an enormous energy waste. And the way that Bitcoin is set up, it will continue to use up more and more and more power. And it doesn't have to. There are other technologies that accomplish the same thing that don't require enormous energy uses. So it just can't be justified to have the energy use. It can't handle the number of transactions that are needed. Okay. Bitcoin can transact like 100 million financial transactions a year, but like Discover Card and Visa process 100 billion financial transactions a year. So you're off an order of magnitude of 1,000, you know? And again, it's like there are other things that can do that better. Bitcoin Cash doesn't have this problem, for instance. Ripple does not have this problem, for instance. Okay. But then you get to the bigger problem, which is that you have to be able to modify the money supply based on current conditions. And in Bitcoin, you can't. In Bitcoin, the number of blocks that come out a day remains relatively consistent. You can't change that. You can't change that based on the conditions, right? Now, there's been some attempts by other cryptocurrencies to deal with that, like DAI Maker. They've created a Federal Reserve of sorts, except for that this Federal Reserve is like the top coin holders, and the top coin holders vote on this thing, right? And then if the economy collapses, then the top coin holders are liquidated and the money is redistributed to other people. And yeah. I'm a little disappointed that Jay was long going into that trade, because I would have liked to have seen at what price he would have been able to get short at. Actually, if I zoom in here, can I see? Yeah, see, would he have been able to go short at 41.96 instead of 94? That's kind of what I want to know. Anyways. Okay. So anyways, there's cryptocurrencies trying to answer that question. But there's a little bit of question about whether that will work, and like, is DAI/Maker going to become the new basis? Probably not. But it's just when you put that in mind, you realize that this claim that Bitcoin is going to become, like they say, when are you going to sell your Bitcoin? And they say, when the time comes. Excuse me, when the time comes, you won't have to sell your Bitcoin. Like, you've seen that meme, right? It used to be the thing back before they started saying it's a store of value. But the simple fact of the matter is that it can't do that. It's like physically impossible for it to do that, because what will happen is you'll have something like COVID, where there is a financial catastrophe of some sort, and Bitcoin will go down. And in this particular instance, you'll say, yeah, but then Bitcoin came back and it roared higher. Yeah, only because of monetary stimulus from the Federal Reserve. If it was just Bitcoin, there wouldn't be that stimulus and we would still be in a depression, right? All electronic technology remains vulnerable to cyber attack or electromagnetic technology, which can wipe out a magnetic memory. You know, the whole thing from Fight Club where they're like, you know, would just wipe out everybody's debt is kind of interesting. That like, what would actually happen in that situation, you know? Or no, just everybody's debt is cleared and we just start from zero again, I guess. I don't know. Anyways. But even with maker/die, you still have this issue of like the government doesn't support it, right? The government doesn't support it. So then what do you do? Well, there's nothing you can do. Like here's the issue. If I'm the US government, why would I come in and say, okay, Ethereum is now, we have a Federal Reserve on Ethereum that is now going to be the national currency? Why do that when you can just come in and make your own coin? Because anybody can make it. I could go and make a coin probably in 30 minutes. I've never done it. I've never looked at it before, but my understanding is that it's very, very easy, right? So the US can do that. They come in, they're spending a lot of time researching and thinking about it, of course. So it'll probably be a few years before it happens, but they're going to make their own currency. It's not going to have the energy usage problems. It's not going to have the throughput problems. It will still be based on the Federal Reserve fiat monetary system. So you don't have the issues with being able to modify the supply and demand based on financial conditions, and it's their own coin, so it will have the actual full backing of a government. And at that point, you've got all of the four things that are necessary in order for a coin to be able to take over the world, per se. So then what happens? The US dollar is out there. It's able to do everything that Bitcoin and Ethereum can do. The only difference is it's run by the US government. So the only reason to own Bitcoin versus US dollar coin at that point is because you think, well, two reasons. One, because you're speculating, or two, because you don't want your currency tied to the US government. Which, you know what? Maybe works for individual people, but if you're a large institution, yeah, what kind of a large institution is going to be like, well, our whole thing is we don't want to be our currency to be tied to the U.S. government. You know, it just doesn't make much sense. So this is why I continue to say that like Bitcoin will continue to be used for speculation. It's not really a store of value. It's a speculation vehicle at this point, right? But it will not become world currency. It can't. So the opportunity for it to have happened is already over, because USD coin is already on the horizon, essentially. So that's one example. The other example is we're just this whole overall market, as everybody comes in here and they say, okay, well, the Federal Reserve is printing too much money. Well, define too much. Because again, the monetary supply has to change based on the financial conditions. And the Federal Reserve has very sophisticated ways of looking at the economy and saying, this is how much money is needed. And they act accordingly. And so we come out and we say, oh, there's too much liquidity in the market. Well, it's because the market needed it. Right? And if there was too much in the market, then the Federal Reserve would start taking some of it back. Now, some people claim that the repos, that because you're seeing so much money being used in the repos, that indicates that there is too much money in the markets. I'm not convinced that that's the case. I believe that there is, it's not quarter end, But there is a lot of stuff going on. There was a lot of activity last week, right? Because the indexes were down, and we're coming into the summer, and there's repositioning because of that. And so the banks are conducting a lot of business right now, and that's probably why they're using so much of the repo facility, right? But from all of the metrics that we know of, to say, what does the economy look like and how much money do we need, the Federal Reserve is doing exactly what it's supposed to do, right? So understanding this key point about how the Federal Reserve works is really critical. And there's so many traders out there that just think that they don't really understand it. I think that they either don't really understand it, or they came in with a bias against the government to begin with, right? And so they have this opinion about the Federal Reserve and the way that things are supposed to happen. So then you get stuff like, oh, okay, you're going to do quantitative easing. This is bad. This is bad for everything. And then they wanted to sell. You'll get like PIMCO. Where PIMCO didn't like that the Federal Reserve was going to come in and start quantitative easing, buying things. And hey, and they were like, that's bad. But hey, you know what? You could have just bought treasuries, right? Like, that was a great time to buy treasuries. You would have made tons of money. But guess what? Because Bill Gross had this aversion to it just because of what was happening, PIMCO didn't take advantage of it, and that's why he's no longer in charge there. Right? What else is needed? I know. Would you traders please check and see if you've hit the like button? Thanks. This really helps. It really does. By the way, we've been doing pretty good recently. Like the stream itself has just been kind of okay. We're at 18 viewers right now. It's a little bit down from normal, but like on TikTok. So I've been posting them on TikTok and YouTube. Oh, we should go and see how many views it got on YouTube. Let's go see YouTube. For that, I feel like I'm going to continue posting them because you guys seem to really enjoy them. I did the one about, failing the moving average. That was kind of like a throwaway. That one was like, oh, I don't think I really have that great of an idea, but we'll just run with it anyways. And it got 1,000 views on TikTok. Let's see here. If I come to analytics, how many viewed that one on YouTube? I'm gonna bet that it was only about 100 or so. Oh yeah, here. On YouTube, it got 90 views. 90 views. I've learned a lot from this stream. Good. So this is the way it's supposed to be, right? I really wish that I could come in and I could be like, here is everything. Here's everything that you need to know. But the problem is that there's so much to know, and every day there's more things to know. So the best way to learn, I think, is to just start trading and be paying attention. See what most people do is they say, oh, well, I need to just start trading, and all I should do is just focus on my chart every day, right? And what's happening is you're missing half of the picture. So they don't learn, okay, this stock went up because of this, the overall index went up because of this or that. So they're not learning the things that you learn about how the financial industry works as you just kind of follow the news, right? So that's kind of what we do here. So we can read them out as they come out real time and then try and analyze and figure out how that's going to affect the market. Okay, so there was that pretty good initial move down. Since that time, not a whole lot has happened. I still don't see anything out there that suggests to me why it happened. There have been a couple of headlines that I haven't read out here. China to limit some corn imports and cancel some U.S. shipments on domestic blending issues. There's one. And, I should have had the news squawk open. Secretary Yellen, to resolve inequality, large amounts of fiscal policy are needed. Oy boy, okay. you know what? I would be all for reducing inequality. It's just I don't think that any of these things that they're proposing are going to help. In fact, I believe they probably make it worse. Probably make it worse. I don't see anything else. So I don't know what caused that informed trading on the downside, but certainly we need to be on the lookout for shorts at this point, right? Are the children out for summer? Do they? Oh, okay. So, but now the ace is here, we can talk about that other thing that I wanted to talk about, right? Let me see. Let me find it here for a second. Talking about momentum. Okay, because he said, so why not just follow the momentum? Good question. So here is a study. The profitability of intraday and interday momentum strategies. Published 2007. So it's a little old. Just put that out there, 2007. Anything pre-2008, you kind of have to be a little bit like, unless they're really, truly finding something like super, great. Okay. In this article, we examine whether a day's surge or plummet in stock price serves as a market entry or exit signal. Returns of 5 trading rules based on one-day and intraday momentum are estimated for major world stock indexes. Okay, so they're trading indexes, which is what we trade. And what does it say? It is found that the trading rules perform well in the Asian indices, but not in those of Europe and the United States. So that's why. So here's what I think happens. Momentum is an inefficiency in the market, essentially, that you can take advantage of. That essentially when a market moves, people assume that there could be more for it to go. And so they try and follow the momentum based off of that. And because so many people try to follow the momentum, you can kind of try and take a trade off of that. The issue is that a more efficient market, that's not going to exist. Like an efficient market is going to know what the price of something is, and it's going to arrive at that price very quickly, right? So that the case in treasuries, this is certainly the case, right? Treasuries have a high degree of mean reversion in them. When you look at the statistics, there's a high degree of mean reversion in the treasuries compared to the E-mini. And it is, in my opinion, the most efficient market out there. And when you try and do some of these trading rules, so there's so many things, I'll go and I'll test it on the S&P 500. Seems to work. Going up, put it on treasuries, useless, because the treasuries just already factor that stuff in, and this is why it's such it's a great instrument to try trading from the beginning, because you kind of learn that, like, okay, like I can't predict that it's going to do this based off of this. It's a random. That not in the treasuries, at least. Treasuries don't lie to you. They don't tell you that this certain thing works when it really doesn't work. Like if it doesn't work, it's just going to fail. And you're going to know really quickly that it's failing, right? Okay. So this study says that momentum doesn't work, but it sure seems like it does lately, doesn't it? So I think that what has happened is, because of the amount of liquidity out there and because of the monetary policy and so forth, I believe that the Federal Reserve has inserted an inefficiency into the market, because we don't know how to properly price that in, and we just take the momentum off of it, right? So I believe that monetary policy has introduced an inefficiency into the market. And so over the past few years, particularly since coronavirus, but really like 2018, 2019, there was some of this. You go back further than that, like 2017, it didn't work. You go back pre-2008, these guys say that it doesn't work, right? So momentum works right now, but I would not assume that it will always work. Yeah. At some point, the market will become more efficient and the momentum should stop working. And that's why in their study, they found that momentum worked in the Chinese market, but not in the US and European markets, because the Chinese market is less mature, right? So then you take that. The less mature of a market it is, the more the momentum will seem to work. You want to know something where a place where momentum works really, really well? Hey, Ace, you want to trade your strategy and make a ton of money? Bitcoin. It's all momentum, man. Because it's a very immature market. Especially since Bitcoin, it's like, well, how do you come up with a real fundamental value for Bitcoin? Like, I mean, I have my way of doing it, but I'm like the only person in the world that does it that way. I think it's a pretty good way of valuing it, but. So that's what I think about momentum. But more to the point, though, I have a strategy that tries to trade momentum the way that Ace explained it to me, and backtests suggest that it doesn't work. It doesn't work that well, at least. Momentum works when it's a trend day. If you know that it's going to be a trend day. Like here's the thing. Today, Wednesday, May 26th, could be a momentum up day, right? Could be a trend up day, possibly, right? I mean, I have nothing to tell me that it's going to be like that, but it's possible for it to happen. Sometimes you'll have something that will happen, like there will be either says you don't know what's a trend until it already happened. Well, so for instance, last time that we had the jobs numbers, right, and they missed big time. As soon as that number was released, I think that you could have made the prediction that we were going to have a trend down day. So certain pieces of information are significant enough that you know that you have to have a trend day. For sure. And there are also certain kinds of, like, sometimes the moon just aligns. So like that's why I say I'm actually not just kind of spitballing when I say today could be a trend day. Like, it's Wednesday. It's been pretty constrained. We're like coming into the end of the month. If any major players out there really have the intention of making a major move before the summer, I think that they're going to do it today. But as of yet, we don't have any evidence that that's happening. We did have that big sell, and I don't know why it happened, and I don't like the look of the market, so I'm just going to sit on my hands for now. I don't know. I would like to do more investigation on momentum strategies, because I do not feel like the current momentum strategies that I've looked at really sufficient, you know? So one thing is that we should definitely be taking into account the oscillation of the market, right? But I don't know. I continue to do stuff. I've had some. So yes, I made some changes to J. Because remember, we did J and it back tested out great. It looked great. But then when we started trying to do it in Sim, it didn't work. And I believe the reason that it didn't work is because the S&P will move, 4 or 5 ticks at a time. And so price was only at an individual price for a fraction of a second. And my system is trying to process that algorithm on every price change. By the time it processes that, even if it only takes a tenth of a second, price is already moved. And so it will never get the price that it wants. Unless it's able to lead it, unless it's able to say, I should be able to put a limit order 5 ticks below and get it, right? So what I did was I changed it to working on 5-second bars. I did some back testing on it. I'm a little weary. So like the order flow based back testing, there can be, especially at the level that I'm doing it here, there can be significant differences. So you kind of have to take the back test in that with a grain of salt. But yesterday it worked really well. So, and here on this one, it was the wrong way. I don't feel this. So this is where I'm like, it's a little too sensitive here. I probably need to adjust the upper and lower bounds and stuff. There's a couple of things I need to change. I was going to change those, and then there was this other thing that I wanted to test, and that other thing that I wanted to test didn't work on, so then I didn't even bother doing the other changes. But I should go back and do the other changes, so that it's maybe not so sensitive, because I don't think that it should have been integrated there to begin with. But I suppose that you could consider it a momentum strategy, because the premise behind this trade is that it's looking for signs of informed trading and trying to go along with that informed trading. There can be as much value in the blink of an eye as in months of rational analysis. Things change quickly, right? Kind of interested to see. So with my shorts, say I pulled that up and I never closed it and I never finished my thoughts on that. It doesn't look like I will get nearly as many views on the shorts on YouTube as I would on TikTok. But I think I'm going to continue posting them on both. And I'm going to continue to make the videos public too. I could make them not public. But then you'd only see them if you were browsing through YouTube Shorts, because you guys seem to enjoy, like you all commented on it. And that made me very happy. Okay, so he caught his profit target. It works, guys. It works. I'm happy about it. When I was watching it before, I was like, okay, I don't know if that was supposed to be okay. But now it's like, yes, he's doing it. He's doing it, guys. It's working. It's a little too sensitive, I think. The problem is that I'm trying to only use the last 30 seconds worth. Yeah, that's a little too much, I think. Maybe what I need to do is I need to have two time frames of it. Yeah, I think so. Should try that. See if that it will take less trades, but based on what I got yesterday, it took more trades than it needed to. It took like 8 trades or something like that. 8 trades for $50, is that too much? Maybe. It already factored in the commissions, so. When we talk about analytic versus intuitive decision making, neither is good or bad. What is bad is if you use either of them in an inappropriate circumstance. Yeah. I really think for the problem for retail traders really is you end up using stuff that doesn't work, right? You think, okay, here's a strategy. I want to trade off of this strategy. seems really popular. There's all these books written about it. Surely it works, right? And then you start trying to trade it and you don't make money doing it. And you're like, so what am I doing wrong? Well, it's my mentality. It's these things. I made this mistake. I did this mistake. Like you're always going to be able to justify a way out where you could have done things a little bit differently. But the reality is that most of the things that they're looking at are random, right? I say, here's, maybe I can make this, because I'm trying to make this case for people to be like, here's why you should think about maybe trading this way instead, right? Instead of looking at technical indicators. And it doesn't seem like I do a very good job at convincing people, does it? So let me put it this way. Why not start with things that you absolutely 100% know work? And then you can branch out and you can kind of explore, okay, so here's something that works. Here's something adjacent to what works. Let's see if that works. And you can spread out from there. Right? So what are two things that we know for sure works, right? Valuing an asset based off of a related asset and changes based on news. Those are two things that we know work. Okay. Third one that we know works, volatility. We know that there are inefficiencies with volatility. Okay. And another one that I will share with you that we know works, although most of the trading world doesn't know works. But there is research about this, is that there are inefficiencies in limit order books. Okay. You can branch out from there. And I guess we could say, so is momentum something that we say we know works? Momentum is something that works sometimes. Are they going to buy this? I mean, it looks like a buy to me, but I'm still a little weary about why the market taking those dumps. How much of the volume was it? It's not a lot of volume. We should kind of sit on our hands a little bit. One thing that bugs me is how can a market be both structured by informed participants and random by academics? Well, so I think you may misunderstand what the academic research shows. So the academic research doesn't show that the market is random. Or the way that they think about the argument is really more the efficient market hypothesis. Is the efficient market hypothesis true or not? So we've proven two things on this. Number one, modern markets are not completely efficient. Renaissance technologies have proven that the market is not 100% efficient, right? So that's number one. Number two, we've proven that your trades influence the markets to move up or down, right? Your trades have an impact on the market. So somebody trading off of a particular thesis will move the market. So the behavior of the market is not random, but it is seemingly random. That's why the better term would be hard to predict, right? Every one of these moves is happening for a reason, but we do not have the information necessary to be able to explain them all. Yeah. But there's also this other sided thing, which is informed participants versus uninformed participants. An informed participant is trading off of news. Informed participants have the advantage over uninformed participants. But uninformed participants can make money. is just that as an uninformed participant, the sophistication of your strategy, it's competitive. So, so you could make money being uninformed just by having a good spot in the queue, right? Well, you're a retail trader. You're not going to get a good spot in the queue. But like, that's just an example, right? Most of the edges that can be gained by uninformed participants are the retail traders aren't competitive on. That's all. But you could still take one of those things and use it as a basis. Okay, getting a good spot in line is an edge. Well, I'm not going to get a good spot in line, but maybe I can use that fact to my advantage somewhat. And so we do that. I do that. But the way that I do that is I just look for situations where the queue is the light. See? Could get in at 31 if I wanted to. Then I would only have to worry about the other price. And if the other price I'm pretty sure is going to pull, then I could have gotten 31 at 30.5. Possibly. Okay, so they're going to sell. The air conditioning turned on and I can feel the fresh air coming over me. Okay. So they're about to cross a critical line here. That's interesting. Well, they made a lot of progress on the downside, but it's not super solid action. I think I'm getting sick. I can feel a little bit of raspiness in my throat. You know what? I should get this out over here. Yeah. The dollar kind of looks dangerously pointed to the downside. Okay. Turning back up. About to start the upswing, it looks like. Ouch. Kind of missed my opportunity to bail there. I kind of want to go with it if it goes through here, but I'm a little worried that, yeah, it's not going to be a huge run. Look at the NASDAQ just getting creamed there. Jeez. Sheesh. If GME pops off anymore, do you think we'll see the bubble pop due to forced liquidations? Yeah, so I was looking at that yesterday, and I'm not so convinced that it's GameStop. Well, so AMC has a ton of shorts on it. I'm concerned for AMC, to be honest with you. I think that the short case for AMC is really strong. I think that the short case for GameStop is nonsense. Like that is a company that is going to survive and is going to grow. Is it worth as much as the market is pricing it? Well, I don't know about that one, but I haven't sit down and price it, so I'm not going to say yes or no. But AMC, I can watch all of the best movies come out on streaming now. I don't think that as many people are going to go to movie theaters, so I don't think the movie theaters are worth as much. But so there's a really high amount of short interest in AMC, and it was moving up yesterday because of that. And so it appears that GameStop was moving in sympathy with it. But then the other thing that happened was that people found a website indicating that GameStop was going to sell NFTs, which are non-fungible tokens, which is, it's a cryptocurrency thing. It's like a painting on the cryptocurrency with a unique code to it. And I don't know. I think it's nonsense. I think that NFTs are a total scam, to be honest with you. People have been buying them for hundreds of thousands of dollars, and I don't think they're worth squat. You shouldn't be worth anything because you can literally look at the picture. Like it's a PNG with a hash associated with it. Like that's it. It's dumb. But that's been getting people excited, right? So people hear, there's certain things that people hear like cryptocurrency right now, and they're just like, oh, we got to buy this stock now. This is the same thing with MSTR and with Tesla. Like the stocks have been going up because of that. And so that may be part of why GameStop has been moving. Now, is that why the rest of the index has kind of been struggling? It's possible. GameStop is now up 11% overnight. pair with GME as a possible merger, which would create a new ticker, which would force a share recall. Yeah, I don't know. I still feel that I think that the reason people bought it was because it was a short squeeze. The short squeeze happened, and the pressure was relieved. But the retail traders that bought it on the short squeeze premise didn't exit. Is basically what happened. And because they didn't exit, you haven't seen the market impact of the retail traders selling. So it remains elevated. That's what I think.
At the level,
unless somebody has been able to make a real case that it really is worth $200 or whatever it is right now. With that one, here's another thing. Yeah, I don't know how you game this one out. I think one of the things that you should look at when you're looking at a market to trade is who's trading it. Or do the people that are trading it seem bright or not? Because if the people that are trading it aren't so bright, then hey, maybe you can get an advantage over them, right? If I was market making, heck yeah, GameStop, that's probably lots of inefficiency there, right? I don't have enough the data that I would make me feel comfortable market making in stocks, but I digress.
More comments.
On the other hand, though,
saying that the key question,
if you're buying something as an investment, and then you look at the other people that are buying that thing as an investment, and they're complete idiots, do you really want to be buying that thing? You know what I mean? So, and more to the direct point, if the people that are buying it are complete idiots and they're posting DD that is complete nonsense, right? So that's kind of the problem over there. So you have to be really skeptical about anything that anybody says about the stock, right? Because there's a lot of people out there that have basically become a cult and say all sorts of stupid stuff that isn't true. There was an article about old floor traders going to crypto because the inefficiencies that used to exist in their space are working again in crypto. Yes, I totally believe that. The issue for me in cryptocurrencies is the informed trading aspect. So if I was able to really develop a strong informational edge in cryptocurrencies, then I would totally trade it. Yeah. But because the majority of the action is just based off of like whales and stuff doing things, and like their impact is so strong, I'm too afraid that the market making inefficiencies that I could take advantage of in Bitcoin would get wiped out by, sweeps of informed trading going against me, right? That's what kind of happens over there. Is you get these guys, they just make money hand over fist, and then there's a dump, and they just lose it all in seconds. I can't tell you, when we were in the 2017, I had some people show me some stuff like this. Like they were just using regular order flow. Of course, the tools that they were using were very, very crude, but they were just using order flow, and they were making a lot of money. And I was like, yeah, but what do you do when there's $1,000 move against you and you happen to be holding it? Well, they're like, they hadn't experienced that yet. And then sure enough, when the bull market ended in 2017, they lost their account. And I met, like, I spoke to 3 people that happened to, and I saw many more examples of it. You know what I mean? So that's why I'm like, I don't think that I want to make cryptocurrency my home.
Time around 10 a.m. Eastern time, we are due to hear comments from Fed's calls coming out. Just a reminder, he did speak yesterday. We're not expecting any new comments from him.
Well, yesterday's low is 41.79 and a quarter.
So in 10 minutes time, Fed's quad.
QAnon is also available on the stock market. What?
However, he is due to speak again today at 3 p.m. Eastern time, where he'll be discussing.
I haven't heard about that in a while. It seems like that after the January 6th thing, that really died out. I think that those guys really, truly disappeared. Playing crypto is similar to playing natural gas. It'll take your face off. Yeah. But the thing is, if you're privy to the information, you see, like a really great example. I mean, you want to talk about trading that works. I don't think there's any more clear example that is easily provable than informed trading off of congressional news, right? These congressmen, there's these people that were only making like, $100,000 a year, and then they became congressmen, and all of a sudden they made $7 million on the stock market. How do you think they're doing that? Come on. Informed trading works. If you have information. Unfortunately, I'm not privy to any kind of information that I could trade off of that from Congress or anything like that. But what I can do is I can listen to a news squawk, and I hear it before the majority of retail traders that think that news doesn't matter, there's a place that you can get an edge, that I know you can get an edge. But it's difficult here on this one. I don't, it seems to be going down for a reason. It seems to me like it's going down for a reason. Could be wrong. Seems to me like there's a reason, but I don't know what the reason is. Sure seemed like a pretty strong sell. How much was it actually? It was 4,000 down? Okay, well, so it's not that dramatic. It's not that dramatic of a sell yet. If we get below yesterday's low, which again is at 41.79 and a quarter, I'll put that right there. Previous low.
German Finance Minister Scholz again just saying that we are very close to an accord on the global minimum corporate tax.
I saw some stuff about Scott Adams. What was he saying earlier today?
And for those who are interested, we have put out the Fitch article saying that the labour market slack in the US will last until 2022. That is up on the Financial Juice news feed if you'd like to read.
I have to look that up later. You're moving up a little bit, so it's already, So if we are just trading off of momentum, at what point do we get it off? Well, Jay went long, so that's interesting. Oh, that's right.
German Finance Minister Scholz just adding that we will ensure that digital companies pay their fair share in tax.
Switzerland cancels ratification of framework agreement with the EU based on results of negotiations in recent months. The Swiss Federal Council has determined that the talks with the EU haven't led to the necessary solutions.
German Finance Minister Scholz says that we do expect an agreement on the global corporate minimum tax within the next few weeks.
It's Tencent ordered to set up financial holding company by Chinese regulators. Interesting.
So just as a reminder for you, in 5 minutes time around 10 a.m. Eastern time, we are expecting comments from
Tencent's going to become a bank, folks.
Petzquaz is only going to be discussing insurance regulation.
There's a function on the options fan bot on Discord to quickly pull Senate House trades. See some interesting things there happen a month or two after. Yeah, so I where did I see it? Was it on Reddit? I think I saw a study on Reddit that of course, it being on Reddit, you would be like incredibly skeptical, but I looked through his work and it was solid. It looked like it was real work, and he had gone through. Basically, he took every trade that every senator or House of Representative official had made and mirrored them. Yeah, he found that not all congressmen were good at it. But some you could follow were really good and some weren't. And but overall that there was an edge in following them. So this is one of those things where I'm like, trying to follow other people, like the other person is always going to have an advantage over you, right? And there's definitely going to be a thing that because everybody knows that, they're going to try and follow him, and they're going to overextend, or that's going to remove the edge from the market, right? But it appears that the edge in that one has not been arbitraged away yet. I doubt that 2 years from now that the situation will be the same. But for now, it seems like there's an edge in following their trades, yes. And the thing that's so great about that one, like here's the thing. Everybody says you should just follow the tape. The big players, they know what's happening, and you just follow the big players. Well, here's the problem with that. The big players know what the inefficiency is, and they know the optimal number of contracts to trade to take advantage of that trade. So here's an example. If I got a signal that told me that Renaissance Technology just took a position in something, I would not follow that, right? Because Renaissance Technology is going to make money from it. You're not. Because they're taking the optimal number of trades, and any person that tries to get on it after that is going to screw their trade up, right? But the senators, they don't know the optimal number of contracts to trade. Now all of a sudden it's like, okay, so there is they know something, and there is room for there to still be an inefficiency. So that one just comes down to how popular does that become amongst retail traders. And unfortunately, these idiots on TikTok are saying to everybody, hey, look, there's this thing that works. Come and do it with us. Way to go, bozo. You're going to ruin the edge. We share it on the stream here, where there's only like a dozen people. Only a dozen of us will know. We'll all keep our mouths shut because we understand, right? Nobody's going to see. But no, we have to go and get as many tens of thousands of people on TikTok to know about it as we can. You dropped a command. Is there a bot that I can just add into the server? It's interesting. Ooh, hey, the Garlic Coin account tweeted something. Didn't tweet anything interesting. Other than that the algorithm that Garlic Coin uses is ASIC resistant. Cool. Okay, so we're coming back down here for another test of the lows. It's being a little cautious and tepid here. Oh, we are going to get a Fed speaker here in a second, although we don't expect anything new from him. But so let's just keep that in mind here. In seconds, we're expecting his speech to be released. they don't lose, just follow them. You got to be careful with that.
So just a heads up, Fed's Qual's full speech is available on the Financial Juice newsfeed if you'd like to read.
Options farm bot. Oh yeah, you just posted the pictures. Do you maybe I can go and find and see if he's there and that he can post in the stocks and options channel. Okay, so there was a touch. I don't know, like it's there. They're trading enough contracts, but they're not. I'm not just seeing a flood of market orders coming in here on the lows, like people begging to sell it. So it could go, and maybe there will be a little bit of a stop run, but we still kind of got this spot down here. You can see there's more than one order sitting down there, expecting that previous day's low to be touched.
We are working for an accord on the global minimum tax at the next week's G7 meeting.
I keep hearing this stuff about like the global minimum tax, and I'm like, do they like? Wouldn't the Senate have to like sign something like how does that work? Because I don't think that they're gonna get it, but who knows? I suppose if the minimum tax was 15%, that wouldn't be so bad, right? Because like low for Ireland, it's like 12.5, so they're not that far off. If they went and changed it and the global minimum tax was 30%, then all of a sudden it would be like, oh my gosh. But then the problem is like you make a global minimum tax and they started at 15 and then they're going to slowly raise it. I don't like this idea. I just convinced myself that I don't like this idea. Nothing I can do about it though. Here they can go and they can make their choice, and there's nothing that anybody in the United States can do about it. Curious that Jay took a long there. But that's where I say again. So when I did the back testing and I used some more, what is the word? Didn't use a threshold that was much harder for the algorithm to meet. It didn't take very many trades. It was only like 90 to 100 trades over the year, but it got a very, very high win rate. It was like 60%. But I'm still like kind of like, I don't know if I even believe those tick replay back tested results. So, okay, well, they did break a new low, but it was only by a few ticks and there wasn't like a very much panic off of it. There's still previous days low. Like, I think that things will probably be relatively calm unless they break the previous day's low. Senate banking CEO hearing is underway. Chairman Brown says it's the first time CEOs of the 6 largest firms ever testified before the committee, which is pretty remarkable. Oh, really? They have JP Morgan, Citibank, Morgan Stanley, Wells Fargo, Goldman Sachs, and Bank of... what is back? I forget who it is. Anyways. Hmm. A little bit of an agreement on 4182. Seems. Well, I think. Tough call. Like, yeah, there's definitely, you see here on the level 2, like there's definitely like some liquidity waiting down there for it. And the issue is that as we've been coming down, how do I know that there's going to be enough sell liquidity to get through that? If they get through that, it could be awesome, but it might be better to just wait for them to get through it, right? So I'm going to exit. Take what was minimum acceptable amount here. Never took one in the treasuries, by the way. I haven't really been paying attention over there, have I? Well, it's been kind of slow over there anyways. They are heading higher.
France's Finance Minister Le Maire says all big digital countries must be included in the scope of the pillar on one international tax reform.
Oh my gosh, the moon thing. So my mom calls me at like 5 o'clock this morning. She's like, oh, and look at the moon. You gotta go see it. And I'm like, I'm going back to sleep. But my wife and the kids got up and went and looked at it. And now I get up and I was like, oh yeah, actually it's a pretty big deal. Everybody's tweeting about it. So I definitely see the distribution forming here in the 82 area. That's why I'm a little nervous about it. Because I know that there's a spot down here, but at the moment they're buying as they come down into it. I really feel like if they were to fall through it, that there could be some real chaos, but I don't see the desire to sell it there. The super flower blood moon, that's right. Like I knew it was a blood moon, but I didn't know it was a super flower blood moon until I woke up. But I'm pretty sure I've seen that before. Well, I don't really see the desire for them to buy it either. So, the market here, performance of various types of investors. Huh. Curious. Biden shut down Wuhan lab investigation probing COVID-19 origins. Ugh. Yep, GameStop announces it's building an NFT platform on Ethereum. Cool. Who cares? China halts banks from selling commodity-linked investment products to retail traders. Oh. Well, the treasuries, they're up there on their highs and they're doing the kind of the level break setup right there at 01. You saw the Starlink satellite train the other day, really? I think people keep talking about it in my area, but then whenever I tried to go out and see it, I didn't see it, so. By the way, you notice the way the level 2 reacting here, like the levels above it, like 81 and all that, were kind of thickening up when they got down there. Yeah, at the moment, it is the book is suggesting that it's going to move up. That doesn't mean that it's going to. That was a sign that I haven't found particularly reliable. But in a situation where markets are being pretty tight. So I remember I was saying like, today could be a trend day. Well, I'm not really seeing much evidence of that. Oops. No, I'll just take my lick there on that one. I made a mistake. You've seen people trying to take time-lapse stargazing photos. Starlink messing all of those types of photos up. Funny images to look at, said though. Oh, really? I haven't seen that. Well, Oh, Biden tweets it's never been a good idea to bet against the American people. Yeah, like Joe Biden's up this early. I guess it's 10 o'clock over there. Maybe he is awake, but he didn't tweet that. Wow, the E-mini may flip up higher here. I'm actually kind of. Well, that's not the best spot to take it. I don't know about this one. I'll only do one contract for now. Okay, so I don't like the way that I got filled there in the treasury. They're going to cross the volatility stop now, so I can pretty confidently say that the trend has changed. Going over here on the treasury, seeing if it's the thing that I was seeing is going to follow through or not. At the moment, it's kind of iffy. Baby unhappy. That baby sure cries a lot. Isn't it normal to Starlink interrupting a comment? Oh my gosh, for real? Oh, that's a really good example there, huh? What technical analysis are we talking about? Well, I didn't think that trade was bad, but at that time it just didn't go through. Probably not enough activity in treasuries for me to be trying to do that. Jay got another one. Well. Okay, cool. We got out of that one.
At 10:30 a.m. Eastern Time, if the US EIA crude oil inventories forecast -1 spot.
Oh, did I have to buy into it? Yeah.
1 million. US EIA inventories forecast -2 million. Previous -2.324 million. US EIA gasoline inventories forecast -1.1 million. Previous being -1.963 million.
French elections, Macron 54%, Le Pen 46%. Do we trust those poll numbers? Probably not. I'm actually thought it would be closer. I guess I don't know very much about French politics, huh? Where's our French friends? Blowout quarter on tap for Nvidia. Thanks, crypto mining, and that's the street. Santorum blames cancel culture and the intolerant left for his CNN firing. What? He got fired from CNN? I forgot that he was even working for CNN. Former CNN senior political commentator Rick Santorum blamed cancel culture for his firing from the network over the weekend following disparaging comments he made regarding Native Americans. Well, what did you say?
And also worth noting before this US EIA release, the US API crude oil stock change came out yesterday at 0.620 million. A slight drop
Okay.
of 1.680 million.
I don't know if what Santorum said was worthy of being fired, but it probably wasn't a smart thing to say, yeah. Sorry, Santorum.
So correction there, the API came out at minus 1.986 million. API came out at minus 0.439 million.
A little bit more. I don't know if I like that. Almost a fill there in the ES. Come on. You can do it. It's only 100 contracts. Thank you. Cool. Probably could have pulled that, but I see, that's fine. The dollar is, remember earlier it was like, kind of looks like the dollar looks dangerously turning around. Not that that has a probability of predicting the future, but there's a lot of other reasons to think that the US dollar might move down, and it did.
Previous 1.321 million. US EIA distillate inventories forecast minus 2 million. Previous being minus 2.324 million.
Now over here in the E-mini, they did trade through the open, but then now they're being skittish again. And look, there's that. Yeah, I don't know if I want to mess with this again. So I'm going to get out. I'm still down 1 in the treasury, but I did good in the E-mini. I could just rest on my laurels in the E-mini if I wanted to. Them treasuries, they want it, huh? Do I detect a hint of steepening? What are you talking about? I'm really appreciative of my work. Is that did you build a new computer finally, Ace? Or we're still talking about your same old one? Okay, so that was what I wanted. It was a little weird, though. So there's definitely some steepening going on here. Not really seeing it very strongly in my charts, but probably we just need another tick. Like the fill makes sense and the spread makes sense, but the level 2 on here does not. No, same semi-new one. No, you say you're using a custom built one, but it needs more juice.
Inventories first, and the rest as they come.
See that OOF? That's not right. But is it needs more RAM or what? Do you know what processor it is? What happens? What does it say if you go into my computer's properties? You right click on my computer and you click properties.
Ten seconds.
Oh, we're gonna get the oil inventories here.
662 million minus 1.662 million. That's a draw on the forecast of minus.
You're watching the trailers. Win gave us for a second.
Inventories minus 1.745 million minus 1.745 million. That's a draw on the forecast of minus 1.1 million. US EIA distillate inventories minus 3.013 million minus 3.013 million. That's a draw on the forecast of minus 2 million.
So here's the oil numbers coming through. I'm not going to bother reading them.
We are just seeing after this release that there is a bit of a rise in the WTI crude oil.
Do you see oil moving up, though? That's good for equities. E-mini has been pretty flat ever since that push that we saw earlier that scared me out. Yeah, that's gonna be it for me right there. Yeah. So what did I do wrong on that one? I think I'm reading the spread wrong. Why am I... Years before coming under fire over Holocaust comparisons, Representative Major Retailer Green said a Democrat should be shamed for invoking Nazi history. I bet you she did. Because I remember a couple of months ago complaining about AOC bringing up Nazi history inappropriately. I see. Well, and how much RAM does it say it has, Ace? $6G 3.1 gigahertz. No, like how much? Here, let me show you mine. This PC properties. Okay. You see right here, installed memory. What does it say for installed memory? Aha. Yes, you need more memory. Yeah, you want to get that to like 16. Get that memory to 16 gigabytes. Which for a machine, based on the other specs they have, probably isn't going to be more than $80. If 16 is good, is 32 is better? Yes, for sure. I have 32. 64 gigabytes on your setup you built a few months back. Very nice. I really want to know, I really wish that I had, AMD. Hey, AMD, if you want to have some fun, you should sponsor us, send us some I'll send it back. I'll just use it and send it back. And let us do some benchmarking with NinjaTrader and let us see, like what makes a bigger difference, the CPU, the memory speed, because I'm not sure. It's a really difficult thing to sort out, I know about the PC parts site that helps you decide which parts fit your machine. There you go. Yeah, exactly. Now I'm not going to say that the processor that you have is great, but I mean, it works. It'll work.
Just seeing
it's not a Ryzen, but
Intel Deputy Bureau Chief saying that Russia's Novak says OPEC Plus.
I had to look at that one up. I'm really familiar with the Ryzen ones, but that was
ready to cut its own to make room for Iran.
But if you built that fairly recently and you didn't spend a ton on it, I wouldn't be. The thing is you don't have to have an amazing computer. Well, my computer is probably overbuilt if I wasn't streaming and programming. Linear calculation for market indicators seems like it would be amazing with GPU processing. I'm actually not so sure because the place where the GPUs become really useful is because you can use those floating point pipe processing pipelines, and you get like thousands of them, right? And that's what makes the like for mining on a GPU, for instance, that's what makes it so fast. When you're just making like one calculation, probably is not going to be much faster than the CPU because like the orchestration and everything is going to be more than the efficiencies that you pull out of doing it on the GPU. If that makes sense. Thinkorswim is probably the most resource-intensive piece of S, heavy on GPU initially, and it's single-threaded. Oh man, yeah, there's some problems with Thinkorswim. I mean, it's not unlike so. The thing is all of these programs, so NinjaTrader and Thinkorswim, are both running on a garbage collected virtual machine sort of a thing. So both of them use a lot of RAM. Okay. They're not very RAM efficient. C# is particularly not RAM efficient because an object, if you go and you create if you create this class and it has 4 properties or whatever, and you create an instance of that class, right? It will take up more memory in C# than it will in Java, is my understanding.
The partnership efforts on alternative payments according to a new job post.
I was still using Sierra Chart. I wouldn't even notice the problems I have running into. Yeah, but there's a lot that goes into that. Anyways, so it uses a lot more RAM. So this is the big thing. It's like I really feel that to be comfortable to have a bunch of charts up and still be able to browse the internet, because internet browsing uses a lot of RAM too. It's a little scary how much RAM your internet browsing will use, right? They just keep getting more memory hungry. But yeah, so the RAM is an important part of it. And then when you get onto the Thinkorswim platform, yeah, it's not it's not multi-threaded. NinjaTrader 8 is. But is it a huge deal for them? I don't know. Probably in a really busy market, it's probably really annoying. Yeah, Chrome is an app that uses like 2 gigabytes minimum. Yeah. This is a tax on body. Well, just remember, it uses a lot of memory, but a memory usage alone is not a very good measure of how resource hungry a program is. Is just the most visible to us because you can press Control-Alt-Delete and look at it, right? For instance, I use not 32. So you have a virus protection on your computer, right? How much memory does it use? So over here, ESET service uses 79 megabytes of RAM. And I'm going to bet you that some of these other ones that you use, they're only using 50. Right? But this is faster. The algorithms that it uses are faster, so it doesn't use as many processor cycles. Oh, you're testing Motive Rave? Oh, okay. Wait, are you doing it through... You're not doing it through EdgeClear, are you? Just on its own? I guess another thing you got to consider is that, like, NinjaTrader, like, what does NinjaTrader do really well? Like, when it comes down to it, NinjaTrader does charts really well. It does charts and custom indicators really well. Okay. Other things, their DOM sucks. Their market watcher, whatever thing, this thing right here, the market analyzer, it's not like particularly special, you know. Yeah, not super impressed with it. So really, it's just the charting part. So I kind of feel like that. It's like, what else you can have? Like, there's those three things. What else is there that you want, that you need? Jigsaw has the best DOM, so that takes care of that, you know. Tick replay. Are you saying replay is overrated, or do you mean tick replay? The whole, like, recording the order flow and then playing it back, yeah, it doesn't work very well. I've never met somebody that uses that stuff and was happy with it. Can be useful to test algos, you know, to really for sure know what it's going to do. But then I'm like, so why not just run it live? I don't know. Do you have a title? That's a good question. A little disappointed. I'm still down 1, 2. Yeah, down 2 ticks in Xeon. I guess I was up 4 ticks yesterday, so down 2 isn't terrible, and they've eluded me today. You know what? There was some better moves that I could have taken advantage of than I wasn't watching, and then I was messing up with it at the top where it kind of got random. I see Motive Wave cleaned up their pricing models. Yeah, that's good. Do it. I'm just getting. So what I'm getting at here, though, is if you're a platform and you're a new platform, what do you got to do to be worth buying? Okay. Well, NinjaTrader has tons of custom stuff. I think that that's worth something, but a lot of technical indicators are kind of useless. So unless you're like backtesting, like, is it really useful? To me, it's useful, but if you don't know how to program and you have no intention of ever doing backtesting, that's maybe not a feature to you, right? So then there's like things like how smooth does it run and things like that. Well, if your machine's not very good, then that's certainly a concern, but like you really have to have a crazy the market that will hit my system hard enough that it's a problem is a market that you shouldn't be trading anyways. That's too volatile for my risk. You know what I mean? So for me, that doesn't really matter, right? So when I look at like Motive Wave, I'm like, okay, like they have charts and there's like a couple of little features in there that are cool, but it's nothing game changing. It's nothing game changing for me. It's just kind of like, oh, hey, I hope that NinjaTrader is watching this and that they add those features too. That's probably what's going to happen, right? But there's some other things that go much deeper that I would much rather see, you know? Like, hey, maybe C# isn't the best to do this with. Like, I get it. It's easier to develop in C# and you can make these GUI interfaces and then people can make their own GUI interfaces. People don't really use that feature of it. So I don't think it's really doing very good. Hey, let's make it in Rust or C# or C++, you know, let's make it in a really efficient language for starters. And then B, let's, you know, utilize DLLs and make it so that you can like compile Python libraries and run them, or run R libraries and run them. You know, like get these really scientific computing packages involved with it. That'd be huge. I mean, you can do it in C#. It's kind of a pain. It's not built in, right? What if it was in there right from the get-go, you know? Thinkorswim is becoming so slow with everyone using it. Data's like 5-second lags. Really? Yeah. I don't know, man. They haven't been as good since they were bought by TD Ameritrade. That's for sure. That's for sure. Python might not be the best, but Pandas makes it awesome for doing this. I would hate to make a large scale application using Python, yeah. But you say NumPy, SciPy, Pandas, and then there's all of these machine learning networks like you can make a generational adversarial neural network sort of thing very easy. Like that's the thing that I think is that's kind of weird about some of the, like when you go to the algo trading subreddit, these guys aren't trading on commodities. They're like they're usually running stuff off of Python, and so you get these people, they're able to build like these really sophisticated neural networks. They don't really understand anything about how the technology works. It's all like the framework like literally does everything for you. When I started looking at trying to do some of that stuff myself in C#, it was like, oh, that's a little complicated. I think I'm going to do it though. I really want to do the, what is it called? Markov models. I really want to make my own Markov model thing, whatever you call it. I already got it figured out. I think what you can do is you can have one strategy that will go through and it will be the trainer, and then it will save some information to a file, and then the other strategy will use the trainer to trade the Markov model. Should be fun, but I keep getting distracted. And there was even I want to meet this guy. Maybe I should just message him. I'm just going to message him. I haven't done it yet, but he posted on the Futures IO board, and he had a video that was basically plugging in a particular framework into NinjaTrader 8. And I was like, oh, I didn't know that because I was looking for the library and I couldn't find one in there. That was the answer. I was like, oh, so now all we got to do is pull it in. Easy. And then try it, I guess. So the funny thing is he was like, okay, like we can do this. Let's do it on a moving average. And I'm like, okay, yes, pick the most useless thing to look at. But yeah, it could be good. The DOM was the only good thing about Trade of 8 if you needed the basics. The old Trade of 8 I'm told wasn't so great, huh? It's kind of funny how people's perceptions of that change though, right? When Trade of 8 first came out, it was like, oh, this is great. I think it was mostly because they liked the commission structure, right? But it was like, hey, the software does what it needs to do, and we don't care about it much beyond that. But now that they've changed it and everything, it's kind of turned into, oh yeah, actually it wasn't very good at all, was it? But it'd be the same thing. So I have things. There are things that I've not seen any platform do. Okay. That I am doing in NinjaTrader 8, I have to program it myself, and I feel like it should be built into the platform. And I'm sitting here wondering, like, okay, is it not in there because they just didn't think of that? People just don't care? Or did they not put it in there on purpose? Because that would be too good. You know what I mean? Like, I kind of wonder. Because I really have a hard time seeing how y'all be trading index futures and not be watching the dollar index at the same time. You know what I mean? Like, how are you trading without seeing what the value of the dollar is doing? Because everything, remember we were talking earlier about, okay, I can look at these two treasuries and see where one is in relation to the other one in make some judgments about whether it's overvalued or undervalued, right? Well, all of those valuations are based off of the dollar. So you also have to watch the dollar and see that it's moving to understand why things moved. You're using Thinkorswim for Tick and Dixie. There you go. Well, on Dixie, do you get it live? That right there's worth buying. I want to take another trade and make a winner, but there you go. And the thing is you have the data, you can make it, I can program it. It was a little more complicated of an indicator, and there's actually some things that we could probably do that I don't know. Hasn't been on the radar, but there's a couple of maybe some things that we could change about it. Because of it doesn't handle the updates. It really only updates it when the main series changes, which could be better. But yeah. Now I think that you should be able to make a synthetic instrument like that without any programming. I think you should be able to come in and say, okay, here are all of the instruments that are involved in it, and here's the formula, and it'll spit it out. And it will work in the market analyzer, it will work in the chart, it will work everywhere else, you know? Why isn't that a default part of the platform? Seems like, to me, that in like spreads and co-integration, like these all seem like no-duh things that should be default in the platform. They don't have them. So that's why I'm like, well, could make my own. That's a lot of work. Like I would have to start a company. I would need like $2 million. So if you want to invest $2 million into Seth building a platform, trading platform, let me know. I don't know how good of a return on your investment you would get, would you? Because if I made a platform, let's say that it was really great. Let's say that my platform was good and it was as good as NinjaTrader. How much money a month how much money a year do you think NinjaTrader makes? You know? Because I bet you that like it's going to be like 3 or 4, but then you have like $1 or $2 million just in like employee costs, and then you're taking on debt before you get it started. You know, like it's a lot of overhead. I don't know how profitable it would really be. Tesla to the moon. Well, that's interesting because the E-mini is still kind of struggling overall, huh? There was that initial, so this is interesting. This has been it's been a long time since we've seen a day as dominated by order flow as this, right? There was a move down. They came just above a critical level. You could see the order flow. We mentioned it many times that there just wasn't the market selling and that there was too big of a limit buys down in there for them to get through. So we came back up. But then when we came back up, it's just done nothing. They came right back to the open and they've done nothing. So are there really buyers out there? Not really. There's just not enough sellers to get it to collapse. But hey, you know what? If we move back down again, I bet you there would be. So maybe that's what happens. Well, I don't know what to put in today's title, but it was a slow day. Not very many viewers today either. Strange lag in ES, yeah. It's kind of interesting that dichotomy. I mean, I didn't lose a ton. It wasn't terrible in the treasury, but it could have been better. 2 minus 2, essentially. This one right here, I took my licks, but that one shouldn't have happened. So I guess we could say that we're only down 1. That happens when you're not pumping GME. Yeah, that's what it is everybody is viewing the GME streams. Well, that's the problem is like, I don't know what we should do about that, because it's not like we can't get huge influxes of users to come to the channel on occasion. It just doesn't result in the number of subscriptions that I feel like it should. Like we didn't get a huge like I feel like something like the GameStop thing was so big. You know, when like for comparison, when we started this channel and the first live stream that I ever did, and it was the Bitcoin futures, and we got like 1,000 subscribers off of that, right? Now that we had like 6,000 viewers, but yeah, we did the GameStop thing. We didn't get nearly as many viewers, but we were still in the thousands at one point, right? But we only got like a few dozen subscriptions off of that. So it seems like you got what I'm saying. So what happens is we get those kinds of events and people do come into the stream and I mean, they're watching, so I guess they get something out of it, but they don't go and say, oh yeah, I want to watch this every day, or anytime this guy puts a video out, I want to subscribe. And I don't know what to do about that. And then, yeah, you lose your regulars when the talk is game. So what I could do is I could say, let's just make this channel about following what the hot stock is and trying to get as many viewers as possible, but then it wouldn't be useful to us, would it? Like the things that we talk about and the collaboration that we do that's been able to help us find edges, we wouldn't have that. So what you gonna do? What am I gonna put as the title for today? We're going to call it order flow driven slow end of month trading. Oh, let's not call it slow. Order flow driven end of month trading. 26th. Save. YouTuber financial education has a good format for getting clicks. Check it out. I'll try it. You need to think about. I really would like to be putting more content on the channel. I kind of wonder, does the regular content and the stream conflict with each other? Would it be better to have them on separate channels or something like that? Does that influence the algorithm? But then I feel like it's better when it's just all in one spot. But I would like to get to the. I am getting a teleprompter, so I'm hoping that with the teleprompter that will reduce the amount of time in recording, and so I'll be able to put more videos out. But we'll see. Okay, guys, I gotta get going. I'll see you tomorrow. In the meantime, stay profitable, friends.